Alright, so in this video we're going to talk about Canoo, and let's just do a top-down analysis. This is the monthly chart, and as you can see, the chart is just plain ugly, right? Alright, so we're going to just go to the most recent price action. You got a drop in price, 3 basing candles and the drop. So this is a drop base drop. Again, this is the monthly chart. And then what you saw was a drop. This is also called a lagging candle. So you had a drop in price, basing candles, and then the drop out. So this is the leg out candle. So drop, base drop, drop, base drop. Going down to the weekly chart, you had a key level of interest at $9. Another key level of interest at $5. As you can see, we had support, support, became resistance. So this was a great opportunity to short on this leg higher. Now, when you see an explosive candle, we call this an extended range candle, there are no buyers in between the opening and the close. So what was great about this setup was that you had resistance and there was nothing to stop price from moving down. So before we continue with the analysis, let's look at this article because there are concerns on Wall Street. So on Tuesday, Canoo saw its price target lowered by Roth / AKM or MKM from $5.75 to $4 while the company's stock rating remained neutral. This adjustment reflects the analyst perspective on the EV makers' caution revenue guidance for this year, despite acknowledging the company's positive commercial strides in the previous year. Now, what positive strides did they make? This is pretty crazy. They successfully completed 22 vehicles for the entire year. 17 of these were produced in the fourth quarter. It's crazy. Out of the vehicles completed in the last quarter, 12 were delivered to customers, and the remaining 10 were retained as demonstration models. Now, management at Canoo has provided a revenue guidance range for 2024, estimating between 50 and 100 million. That's a drop in the bucket for operating expenses. So, I question whether they have enough money to over the next 12 months. This forecast is considered by the analysts to be potentially conservative, suggesting room for upside if the company outperforms these expectations. Now, the CEO, Tony Acula, emphasized the company's strategic focus on the upcoming quarters. The plan includes harmonizing the supply chain, scaling up the workforce, and adjusting the product mix to align more closely with customer workflows. All right, so this is the weekly chart, and what you can see is you have this hammer candle. So potentially there are buyers in this level here. Now we're going to drill down to the daily chart. So if you look, again, this is that hammer candle we saw, but within this you have a drop, 2 basing candles, and the rally. So this is a daily buyers level. I'm going to take this off and just leave that there. Now, you do have a gap, which I anticipated getting filled. It's also near a round hole psychological number at $2. But this is kind of where I'm looking for at least price to stall right from this leg down. Now, if it's me, I'm not interested in Canoo. I think there are other opportunities, better opportunities out there in the markets. If you're in it, depending on your cost basis. If you believe in the company long term, you hold. But other than that, from the monthly chart, it's very ugly. If you want to go long, conservative, big picture, just wait for price to get above this 13 simple monthly moving average. But you might be waiting for quite some time. Thanks for watching. Subscribe. Please like the video.